Now, there are three key reasons which makes S&P index the best investment vehicle for 90% of the public out there, including myself. Number one is historical performance. Now, although it is definitely possible to lose money in short term on S&P 500 index when market is in a correction or in a decline, which for instance has recently happened with the inflation rates going up and the Ukraine-Russian war. However, you're more likely than not to gain money over time. That is because S&P itself has a strong history of delivering strong results in long term. Now, this isn't to say that S&P 500 winds up ahead every year, but this is a good investment in the long term. Now, looking at data, since 1950 to 2021, S&P 500 has yielded 11.6% average return on an annualized basis. Now, assuming S&P 500 continues to maintain this track record that it has delivered in past 60 years in the future years as well, that means that if at the age of 25 you invest $500 every month into S&P index, then by the time you reach 60, you would have accumulated $2.4 million. Now, one caution, past performance is not a definite proxy for future performance. However, think of it this way. In case you have confidence in United States' ability to perform economically good, just the way it has performed in past 60 years, then you have all the reason to expect that S&P index will continue to grow. Frankly, for someone like me, it is much easier to have confidence in the economic performance of a total country than in a single company. Hence, I always advise against stock picking, rather going for an index like S&P index, which is representative of entire country's economic and financial performance.